You've heard the saying, there's no such thing as a free lunch. Well, that certainly is the case when it comes to money. You see, regardless of what you purchase or how you pay for it, you really finance everything you buy. You either pay interest to someone else or you give up interest you could have earned otherwise, which is called opportunity cost. But as prevalent as interest is in our lives, the truth about interest remains a mystery for most people. Why? Because of a lack of understanding. Financial institutions are careful to present the aspects of interest in a manner that benefits them, but conceals vital information from you. Similar to the way a skilled used car salesman highlights the fact that a car has been freshly painted without disclosing that an accident was the reason for the new paint job. In the next few minutes, we're going to dig deeper to uncover the rest of the story, so you'll understand interest at a whole new level. Assume you're about to buy a new home and you have only two loan options to choose from. If you choose the first loan option, over 80% of your combined mortgage payments over the life of your loan will be interest. If you choose the second option, you'll get a standard 30-year fixed-rate loan with an interest rate of only 6%. Which of these two loans would you choose? If you're like most people, that's an easy decision, but it might surprise you to find out that they are the exact same loan. That's right, there's no difference. How can that be? Consider this. If you were to get a 30-year 6% fixed-rate mortgage for $250,000, you'd end up making payments of almost $540,000, which is about $290,000 of interest, or 54% of your combined payments. However, this assumes that you keep that same loan for all 30 years. But how likely is that? If you're like most people, you'll end up buying a new home, moving, or refinancing before the 30 years are up. In fact, statistics show that the average person ends up moving or refinancing every 5 to 7 years. What does this mean? This means that over 80% of all the payments you make on your mortgage will be for interest. Why? Because even though your monthly mortgage payments might be fixed, the principal and interest portions of those payments are not. Just look at any mortgage amortization schedule and you'll see that almost the entire amount of your mortgage payment is interest the first month. Then it gradually declines over the 30 years. So, by moving or refinancing every 5 to 7 years, you start the process all over again. As a result, you are constantly stuck in the worst years of a mortgage, where over 80% of your payments go to pay interest. So, in this scenario, the volume of interest is 80%, which is a far cry from the interest rate, which is only 6%. It's like going to the doctor's office to get a shot of some kind. It's not the rate at which the medicine is injected into you, it's the volume. Too little and it won't do good. Too much and it can kill you. The same holds true with interest. The volume of interest is the real issue, not the annual percentage rate. Now, if you're the type of person that pays cash for everything you buy, don't fall into the trap of thinking that interest doesn't concern you. It does. You must factor in the opportunity cost of the cash you used to make your purchases. The question to consider is this: if you had not spent that money, how much interest could it have earned for you? As you can see, there really is no getting around the fact that everything you buy is actually financed, either with someone else's money or your own. By looking at the volume of the interest instead of just the rate, and by factoring in the true interest costs for all purchases made, whether paid for by credit or cash, you are beginning to think like a banker. So, congratulations! Now that you're thinking like a banker, you will soon be in a position to stop supporting the employees and shareholders of other banks and finance companies through all the interest you're paying to them, and instead use that money to support you and your family. You'll soon discover that becoming your own banker will prove to be one of the wisest decisions of your lifetime.